Oh my gosh, are you looking at a REBNY financial and losing your hair or pulling it out? Don't worry, that's what most people do. So let's go over how to properly fill in a REBNY financial form and even what it is so that you can make an offer here in New York City. Hi, my name is Erin Wheelock of the Wheelock team at Keller Williams, and this is a REBNY financial statement. Now, REBNY stands for the Real Estate Board of New York. And this financial statement is extremely important in the purchase process. You aren't always going to need it, especially in new development. If the bank says you can close, the building believes you, no problem. But considering 63% of the inventory here in New York City is still co-ops, we are going to be more than likely needing this REBNY financial form filled out. Why, you might ask? Well, I'll tell you. There's two big things that co-op boards look at when they're looking to approve a buyer. And since you're submitting an offer, they want to make sure that whatever buyer they accept can actually make it through the board, right? So they're going to look at two things. One of them is going to be your debt to income ratio that they'll find out from this form. And the second thing is going to be your post-close liquidity. How many months can you afford to live in that home if, God forbid, something happens, right? So let's talk about page number 1. Now, pretty clear, your name, co-applicant's name. Co-applicant could be somebody else that's going on a mortgage with you. Co-applicant could be a partner who's living with you. Co-applicant could also be parents or a child. Every building is going to have a little bit of different rules in terms of who needs to be an applicant, who needs to be a co-applicant, but that's where you would go. The beginning is pretty easy. Your name, your address, and then it's going to ask for things like cash in the bank, money market funds. I want to be really clear here. When you're putting things in for an offer, you can just put it into the dollar amount. Now, when it comes to an actual board package, you're going to need to fill this again, and it's going to have to be to the penny because you're going to have, let's say, cash in the bank, $1.3 million is what you write on here, right? But maybe your bank account says 1.3682 and 52 cents. Well, when that bank statement gets printed and put in that board package, that board is going to want to see that exact number on that bank statement on here. But for the offer, you can run, like within reason, okay? Don't go crazy, or at least just not put the pennies. So cash and bank money market, contract deposit is 10%. Now, don't put anything there because you haven't paid it yet. So you can leave that blank. Investments in stocks and bonds, and you'll see it says see Schedule B. Now we have the second page. So Schedule B. It is going to be your stocks and bonds, amount of shares, description, what the market value is, and the non-market value. Now, you don't have to list out everything for the offer, but it is good to give an idea. I know there's been many people who have stocks that maybe haven't vested yet, right? And if that's the case, not going to be as liquid. So definitely put that down. Investments in your own business. I know if you're like me and you own a business, you probably have a lot of money invested in it. That would go there. Accounts and notes receivable. Maybe you made a loan to a friend named Peter and Peter still owes you money. That would go there. Real estate owned. You'll go over to this Schedule C and you're going to see it says description, location. You can just put the address, date acquired, the cost, right? What did you pay for it? And then the actual value. So if you don't know how much it's worth, you can always check Zillow, get his estimate, ask a local real estate professional. If it's in New York, ask us. If it's not in New York, ask us. We'll put you in touch with an agent wherever it is throughout the entire globe. And that would go there for the value, what your mortgage amount is, the maturity date for that mortgage. Of course, if there's nothing on it, you can leave those blank. For the monthly operating costs, they're really looking at, do you have any HOA fees where you live? And then residential or commercial, what would the gross rent be? If this is an investment property, then they're going to want to see there, what is that rental income that you're getting on the property? And again, that's gross, right? Because right before it, you're putting what the costs are. After real estate owned is going to be automobiles. If you don't know what your automobile is worth, you can just put down what a Kelley Blue Book value is. If you drove it off the lot, it's probably worth half. Personal property and furniture. This one I think is really important because everything that we put on this is being taken extremely seriously by the seller and their agent, right? This is where they figure out what assets you have, what your net worth is. They really get a picture to make sure that you're going to get through the board. Not only do they not want to waste their time with the buyer that's not going to get approved by the board, but you don't either. So be as accurate on this form as you can be. So Personal property and furniture. Here's what you have to know about that. When you put in the actual board package, they're going to ask you for any supporting documents that you have for everything that you put on here as an asset and everything you put on here as a liability. So I have $50,000 worth of personal items, right? Maybe you put that on there, and that's great. It could be, I just bought all of my accoutrements from Jonathan Adler, and then my restoration hardware couch and a few other pieces, right? That's great. Now, unless it is appraised or you have an extremely recent receipt, I probably wouldn't put it on there. So what we usually see on here are things like if you have any rings that have an appraised value, watches that have an appraised value, artwork that has an appraised value, anything like that. Really, jewelry and artwork is, I think, what we see the most of that has an actual appraised value that we can put into a board package later on. That you definitely want to put on this form. Life insurance. Very important. When you fill in the life insurance, make sure that you are only putting in there the cash surrender value. They're trying to see what your actual assets are of today, not when it matures in, 50 years. After that is going to be retirement funds in your IRA, followed by your 401k, any KIOGs, any pension plans, right? All of that's going to go on here. Then, of course, there's a Schedule D in case you have any other assets that haven't been brought up yet. Maybe you own a horse. I would put that on here. It's an asset. Congratulations. You now have all of your assets with a little total down here. Don't worry if you come to us, we have something that automatically calculates it. Now it's time for your liabilities. Your liabilities are going to start with notes payable. So there is a schedule for that on sheet number 2E. So who it is, etc. You can just list them there if you owe anybody any money. Maybe you got a loan from your parents for the down payment. Fantastic. You can put that there. Next is installment accounts payable. And you'll see underneath it, it has things like automobile. If you have any student debt, that should probably go there. Below that, they're gonna have any other mortgages that you have. I wanna be really clear. This is not about the mortgage that you're going to obtain on this property if you are obtaining a mortgage for the property. This is going to be any mortgage you potentially have on any other properties. Revert back to Schedule F. To be completely honest, I'm not 100% sure why they have the real estate twice, but revert back to Schedule F. It's just who is it paid to, what's the maturity date, what are the payments. Next is any unpaid taxes, right? Any unpaid property taxes. Maybe you have some unpaid taxes that you've been postponing for a few years. That's going to go there. And then if you have any chattel mortgages. So a chattel mortgage would be a mortgage on a movable piece of property, maybe a houseboat or a mobile home, something like that. Next will be any loans on your life insurance policy. Let's say you took out some money on that life insurance policy previously, that would go there. Next is if you have any outstanding credit card debt. This is another one that's important, just like the personal property. It's easy to go into your account and say, hey, I owe, $20,000 on my credit card. Well, if you pay that off every month, it doesn't have to go there. What needs to go there is any outstanding balances. So like maybe if you've been racking up some debt on your credit cards over the past few years, just put that there. Then if you have any other debts, be sure to put them on here. And of course, that will go with Schedule G. So now we've gone through our assets, our liabilities. Liabilities will add up, and then it's going to give you a net worth at the bottom. So now we're going to go into your income. One thing I want to be clear about is make sure that you read this. A lot of the ones, and the ones that we use most, say monthly income, but some of them will say yearly income. It's just easier to do the debt to income when it's monthly, so we always prefer this one. Now, I want to be really clear. Base salary, that one's good. Bonuses, however, I know a lot of our clients do get a large bonus at the beginning of the new year. If you have a guaranteed bonus, take that bonus and just divide it by 12, okay? We don't have to overcomplicate the bonus part. Any dividends or interest that you may get, that would go on here as well. Any real estate income net. This is important. The reason why this is net is because we are not putting the expenses of a rental property underneath the next section, okay? Let's say you have a property in Topeka, Kansas. You rent it out for $1,000 and your monthly mortgage expenses, etc., on it are $700, right? So you would be receiving $300 a month. Now, after that is going to be your projected monthly expenses. The reason why we didn't put your potential mortgage up here is because it's going to go down here. It's the projected, right? What's the maintenance on the home? If you're looking at a condo, that would also be your common charges. Let's say you have 2 other properties and they both have $1,000 of HOA fees. So that $2,000, right? Two properties, $1,000 each. That $2,000 would be included in this as well, right? We have to add what our monthly expenses are projected with what you have now. Let's say you have a home in Georgia, you're already in contract on it. That one has a monthly cost of $1,000 a month, right? But you're already in contract. It's going to be sold before you close here. You don't have to put that there. Then it's the apartment financing. So talk to your mortgage professional if you are financing, find out what interest rate they are using, and then we're going to add that up and put our financing there. Any other mortgages, right? We're going to revert back to what I said previously, what's in the itemized form. And any other mortgages, you're going to go there. Bank loans, right? Do you have a loan with the bank? Other loans, auto loans, could be some of that student loans, right? Things like that. Maybe your car you have a monthly payment on. Anything like that's going to go there. Then they're going to have a total at the bottom. Now, again, the reason why this is so important is because most co-ops are really looking for 25% debt to income ratio. They think that that's really healthy. I know Kevin O'Leary, Mr. Wonderful, says that 40% is an okay number for what you can spend on your home, but unfortunately, co-ops do not agree with you, Mr. O'Leary. I'm sure you're watching. They really want it to be as close to 25% as possible. 30% is kind of what we're seeing as the max that co-op boards will approve, but just something to keep in mind. And if you're looking at how to do the debt to income, I was like debt to income, right? Debt over divided by the income. That's how you're going to figure out your percentage. So if you want to know, where do I stand if this is my income and this is what I'm expecting to purchase, you can figure that out. Then the last section is just any contingent liabilities, right? Perhaps there's a note. Do you pay child support? Any alimony that you're paying out? So you can just put that there. It's in the bottom. That one's a doozy. I know not everybody loves filling out that REBNY financial form, but I do hope that I was able to make it a little bit easier for you to be able to get through it. And of course, we at the Wheelock team, if you need help filling out your REBNY, we would love to help you out with that and the entire buying process. So please feel free to reach out. And if you've done a REBNY before, I would love for you to put what your experience was like in the comment box below. All right. Thank you for tuning in. And of course, we at the Wheelock team would always love to be your global real estate team of choice. And if you haven't watched the buying process yet, I would go get that. Bye, guys.